Wednesday, September 4th, market analysis, Stan Ehrlich. Good morning, about 10:07 California time, and we are going back and forth in general this morning on the stock market indexes. The E-mini on your screen, September futures, had a huge bearish engulfing yesterday. Unfortunately, we weren't overbought within the allotted previous days, and so it did not turn red. A little disappointing, but nevertheless, you know that the bearish engulfings are one of my favorite sell signals in general, but not an ER sell signal per se, which does change the price action red if it's a sell, or buy if it's a green, and red if it's a sell. So, not red, too bad. But the high yesterday was a new high since the top of the market in the middle of July, which was a bit higher. This now looks very much like a double top starting. The second high is kind of flat and 2 weeks in size. The first one is a little more normal. Oftentimes they're only 1 or 2 days for the top instead of a week and then 2 weeks, but double top. Now, the first thing we do is go down to the lows between the two highs, 51.20 and a quarter. That is going to be support, and I've got a couple other layers on the way down. We're just today and a little bit yesterday bouncing off of the first support area, which is approximately 55.20 down to about 55.03. And that does contain yesterday's low and today's low. So I'm not surprised it's bouncing a little bit, plus the fact that it's a little exhausted from yesterday's huge, relative to the last many months in general, down day. We don't see very many. They usually start something like this one, I think, or end something like the one on August 5th. And that started something up. And it was a buy signal also. So I don't mind it fiddling around in here. I don't mind it going up to, say, 55.90 or maybe even a bit better. That's basically resistance, but it should turn down and make new lows within a few days or maybe very soon, like today. We could see another couple of hard down days to the next support area, 54.30, 53.98 area. And then we'll be halfway to my first significant downside objective. Now, I think this is going to go on during the month of September. I'm looking for the October lows to come into play again. I keep reminding you, and it's coming true so far, that I believe 3, maybe 4 times in the last 30 plus years, around 90% of the time, if not a little bit more than that, we have seen a significant buying opportunity. Sometimes they're relatively small and not that big a deal. And sometimes they are incredibly profound, major bottoms from months and months prior, if not years, to the beginning of the bull market. Like, October 16th of 22 started this bull market, which is still, in my opinion, definitely still in progress. So I'm only looking for a September break into the October lows, and then up we go to new highs for the whole damn shebang by December. That's kind of what I'm expecting. Next chart is going to just be the 5-minute detail on the E-mini. And I'll squish here so you can see the last several days. And whoops, I didn't change this 5-minute, I said. And here we go. So you can see that we really broke down from very early in the morning, which was actually Sunday afternoon, for a new high by just a little tiny bit above all these other highs. So that resistance zone stopped it. And at the end of the same day, we were all the way down here yesterday, a low of 55.17. That is a large move, not mentioning the fact that it's a bearish engulfing also. So today we made a little bit lower low, some minor little double bottom, bounced up. That worked. Already got as high as it was supposed to, somewhere in here. Topped out in a little overbought condition on a 1-minute chart. That doesn't count for too much. Got to be careful about reading these indicators when you're looking at very short-term charts like 1 minute. I'm not going to be surprised if it makes a new low today. I do expect it to close below this low, today's low, by the end of the week. And if that's not happening, next week, next chart. And that's a basic statement for most of these indexes. This is just the daddy, the spider, almost a new low, not quite. E-mini did it, earlier. and nothing going on here that's a surprise to any extent whatsoever. Basically, just sitting around. Um, the spider's up 7 ticks or something, nothing, unchanged. And actually, it went red, lower. So, QQQ. We have a sell signal on the exact high day, which was August 22nd. I told you the day it happened. We also had a rally the next day, which was able to get up high enough to put on a new short ER3 signal for both the scalp and a overnight position. And the overnight position, I don't think I have showing here. No, I don't. Sorry about that. Maybe tomorrow. And now we see that it's heading down in a more steadily manner, if that's the word, in a more steady manner in the last week and a half. And again, the high was a bearish engulfing on top of the market. Great. Barely, I might add, over 75 at 76.05 for the high RSI that day. So it all qualified, little above resistance, turning down. I'm going to get down to 440, let's call it 450 to maybe 435 area within a week or two. Next, QQQ. Pretty much obviously the same thing. Looking for new lows, 5-minute chart. We are bouncing off a little bit of support. You can see this area, those two, a little lighter, darker, have held before, and they're holding again yesterday late and this morning early. So maybe a little bit more of a bounce, but again, not much, not long, and new lows soon. Next, we have the daily data chart on the NASDAQ, and we got the top of the market on the NQ futures contract, September on, again, August 22nd. We had another sell signal that did not get violated. The high of that bearish engulfing day, which was just barely in time for it to qualify, we never got above that high. It came very, very close to it yesterday, failed to make a higher high, and dropped like a rock. Now, today, just floundering around a little bit. We made a little bit more downside progress. A little bit more of a rally again is not out of the question. Then Tierra del Fuego, land of south, head south. Next, land of fire, actually. Sorry. It's slang for South America, southern tip of South America. NQ, NASDAQ futures, 5-minute chart. And it's just showing you the detail. I got not too much to add for the detail today. It could just flounder around, bouncing a little bit in here and then go down. YM. Now, the first high of this double top in the Dow Jones futures contract is a bearish ER sell signal. Boom. The one before that at the highest high for the rally, which was on May 20th, the top. Kaboom. And the third major sell signal that we had on April 1st is an ER sell signal. Yikes. We got the bottom of the market between those two highs, and they were both sell signals. Too bad we didn't get to buy here, just support and oversold. Couple of bad signals in the interim, lost small amounts. And the last signal was a buy signal that worked one heck of a lot better than I expected, and we're all the way back down now to the same prices we were about a week ago when we got stopped out. Now, if I had managed, quote unquote, the stop by fiddling around with it over time, I might have been able to make a little more money out of this by slowing the stop down a little bit. That's modestly questionable, but it wouldn't be that much more. Anyway, I like what I see. What can I say? I got nothing to change. Double top formation, minimum downside objective if we get that week for the October lows, 35, 470-ish. Quite a bit of a break from here. And the details so far, that's when we got bumped out right near the low of the day. It happens, unfortunately. But again, we have now been yesterday and today back down to the same prices. So we might have been able to make a little bit more in there. Not quite sure. If we would have lowered that stop slightly, we would have missed it. And then the angle of the green line would have been something like maybe there, over here. So next, we've got the Russell major historical resistance, stopped 2 rallies in overbought conditions. Big break to support very accurately. Turned around, did give us a great buy signal, popped up quite a bit, almost to the major resistance area again. And now, like the other indexes, I'm expecting support areas below the market to be tested. And then we've got the short-term 5-minute data on the Russell. Now we go to interest rate futures and precious metals. I did not expect the bond market to pop up as much as it did yesterday or as much as it has been doing so far this morning today. That was redundant. But nevertheless, I don't think it's going to go too much further. I think the market's going to top out at maybe a little bit higher. I've been wrong about this amount of strength to begin with. So the yellow line again, maybe. And that would be, I don't have my crosshair cursor. I don't know why that disappears. Local click. Okay. Around 125.20, if that, and down. And I think it's going to bottom out during October in this green circle I've drawn now for the last couple of weeks. I've had that circle in there. The same thing for Treasury notes, 10-year. Down into this green circle in October in this price range, at resistance now, where it's been twice before and stopped, not particularly overbought. I know bonds aren't either. Double checking that. Yep, they're not close. So what do we got for gold? The gold market is crude. Crude market's dropping below the major bull trend line, which was the bottom of a giant pennant that we got stuck in for a month or two in this range. Finally, it's breaking out to the downside. This should be pretty darn bearish. I am expecting at least 67.30, probably 64. And I'm not ruling out something down here where it got to before, a little over 58. Now, we've gotten a couple of buy signals lately in natural gas. One of them was yesterday. We have already an offset on that. I had a relatively tight stop. We took a small loss. And on the previous one, the basic point I'm making, it depends upon how you handle your stops. We got a buy signal on the exact low day, green, on August 28th so far, and one yesterday, and neither one of them have been violated. That means getting below the low of the reversal day. And I'm expecting to see more strength, up to 2.4 and a half ballpark, and maybe 2.6 and a half. But I wouldn't rule out a couple of other resistance levels at higher levels. Let's see what we can do if we get up to 2.4, the first thing first. Okay, just a second. Sorry, my headset came off. And we got after natural gas, heating oil. New low yesterday on a closing basis, below previous lows, despite a buy signal, which had a small loss. And we're in a free fall. New low by a lot, closed on the lows, follow through, low and last right now. How low can she go? Well, oh my goodness gracious. I can't tell. This looks like a huge support area historically, and I got not too much detail here to work with. What about, yeah, that's not bad. Okay, 2.00, let's call it, would be my next support level. And that's not particularly good. Next, gold. Topped out on a bearish ER sell signal on the high day. We got bumped out, looks like today, on a little bit of a rally with a profit. And so far, the signal at the top of the market's been real good. If this formation continues, we'll be coming back down to or close to 2350. And if that is broken, then we're going to see a move down to probably 2180 and a bit below. That means that we're also looking at a bear move on silver and platinum, and that is in progress. Now, December silver, almost another new low. This size of this rally was a little bit unexpected, although it did turn around and come all the way back down here. That's great. So minor support, not far from oversold, maybe bouncing off this little yellow support zone as it did before with a buy signal at the bottom. But my real downside objective, and it may take a month or two, is going to be 24 and a half because of the large head and shoulder top, which started in April and then topped out in May and had a little tiny bearish formation in July as the last formation, shoulder of the big head and shoulder top. So that's still in force. Buy signal worked pretty good, and we're on our way down to break it and make it down to the objective. And what about platinum? Same story, except it's already made new lows. Yesterday, it made a new low for the trend down. Today, it made another new low for the trend down, but getting very, very close to oversold, I have to mention, and very, very close to the bottom of the support area, which has a pretty decent history in this price range of bouncing off of it. So we might just see another little bounce, but if we can break below 894, and it's not far away, and we're also, again, I stress, not far away from oversold. So the bounce looks pretty possible. I won't use the word likely, but maybe. But still, I'm bearish to the downside objective of the head and shoulder top to 808 and copper. We have the possibility of a double bottom of sorts. We're oversold today and yesterday. Looks like the downside momentum is slowing down almost to a support level. Watch for a possible double bottom, but you got to be basically bearish because we had a big top here in extremely overbought conditions, way up there at 87, 88. And when that happens, usually it tops out big time, and finally it did. So a low, then no new high, new lows, no new highs of any significance, and we're about to make it looks like new lows in general. But watch for a possible double bottom. Next chart is soybeans and then oil, meal, corn, wheat, cattle, hogs. Now I fiddled around with the trailing stop this morning and slowed it down a little bit just to show you what we can do here. So this is not the exact same stop you saw yesterday. I think we got bumped out yesterday a few days ago. So if you slow your stop down, and this has to be before you get stopped out, obviously, I have the advantage of 20/20 hindsight at the moment. You could have, would have, should have stayed as long as this one is staying. Now, at this rate, I've got a really nice profit locked in, and I probably won't fiddle with the stop again because I kind of like the way it's fitting after a week now. Soybean oil. I fiddled with the stop again this morning, and we got out at the high day. You were able to get out at the high day if you had in foresight using my slightly different stop that I showed you yesterday. I'm showing you what could have been done. So now the break is way too much for me to stand for. Our long-term investor might be okay with this. And you can also change the stop to go even that slow. But I'm a short-term scalp trader and or swing trader, not necessarily longer term in general. So overbought, turned around at resistance almost exactly. Same day, coincidentally, with this particular trailing stop kicker. We're out. Dropped off dramatically. And again, today we are challenging the lows for the last few days. I think this market is going to come down all the way to the previous lows of 37 and a quarter and probably break below it. These grains are trying to do something bullish, and not all of them are looking that great so far. Next, meal's doing okay, but again, look what's happening. We're approaching a bear trend line, could stop there. We're overbought for the first time today in weeks. So that means it's likely to stop. Now, two reasons for it to stop rallying. In general, a resistance trading range, not that well defined, where to stop before. So we got trouble just up ahead a little bit. And then I think it's going to turn down again. It very much depends on how the market handles this next dip down, if it can make new lows or not. So something longer term bullish just might be in the offing, but I can't talk about it. I don't really see it. I'm looking for more of a dip down, challenging lows. Corn, very close to overbought, very close to the top of this resistance area. I told you before, my minimum upside objective was about where it got to today. And I was probably saying something like 412, 11, 411, 12, 13, right in there. So being almost overbought in this resistance area, almost getting to the resistance level, I think this thing is about to stop rallying and turn down. Next, wheat. Even though we got the bottom of the market with an ER buy signal to the exact day and another one yesterday, we're still long from yesterday and making good money and locking in a profit at this point already. So that's great. Our long is around 553 approximately, and we're 577. Okay. And high and last. Getting close to a resistance area, I might add, and we're overbought today. So that would lead me to believe I might consider tightening the stop even faster. But I'm letting the system do it. I don't want to do it. I usually don't interfere with real-time stuff. Hogs, cattle, I meant cattle. Again, fiddle with the stop. We're hanging on to this trade. This one we hung on too long. But anyway, so far so good on this one, making money. And locking it in, that one didn't get the chance to lock it in. So nice. What can I say? Getting up toward resistance, nowhere near overbought. So we have plenty of elbow room in that respect. So maybe this resistance could get broken and we might get up to 184.5. Next is hogs, overbought, prime territory for a bearish engulfing sell signal that would turn it red. New high for the trend, higher than yesterday's high, obviously. We have a long way to go to get below yesterday's low. That's the problem. It has to have a pretty big break here in order to do that, but it could. And then we would have a big red bearish engulfing ER sell signal. So it's trying to, but at this point, not all that close. Overbought conditions, we got the higher high. Current quote is a little lower than the previous close on the way down. But again, it's got a long way below to get to below yesterday's lows. And now back to the E-mini, down just very slightly on the day, no big deal. I think, like I said before, there's a possibility it could make new lows even today for a new low. You guys have a great trading day. Profitable trading to you.